This is Ken Lake with MAC for a technical market update in the ags for Thursday, October 27th. So the soybean market I want to concentrate on first. The soybean market has continued to surprise us with higher values. Started to see a little bit of a correction this morning, and then that got wiped away as soon as we showed some red in the market. So we continue to see some short covering in here and end user buying, which I think could signal the bottom is in this market at 938. We've traded today and closed just above the 100-day moving average for the first time since way last summer in July when we had that break. So technically a very good close here tonight at 1014 with that 100-day moving average at 1012. Noticed also that shorter-term moving averages of beginning to cross over into bullish territory. Once again, would be the opinion that this 938, we'd scored our contract low for the November contract at these values. Stochastics overbought would signal a correction if it weren't for the fact that momentum indicators can simply stay pegged in overbought or oversold territory for quite some time. The other dynamic that we have going on here is South American seedings. According to well-known market analysts, the Brazilian seedings are predicted to be up 2%, Argentine down 3% for various financial reasons. The fact that they had a bad crop last year, there's probably financing issues with South American farmers where they can't get financing to plant a crop, those sort of things. That expansion in South America is literally non-existent this year, which means that even though the U.S. has a record crop coming in the door, the market has completely shrugged that off at this point, and we'll be looking toward South American weather soon. And if we get into any sort of problem with South American weather in the next 6 to 10 weeks, we could see a significantly higher soybean market in an effort to buy the impending U.S. Spring crop. I want to switch to December corn. December corn, somewhat of a compression here around this 350 range, but once again, the 100-day moving average at 354 we've exceeded, closed above it at 357. I will tell you that supports 348, then 339, but our objective now will be this 365 area and probably eventually a 380 December futures area. Now, those of you that putting corn in the bin and playing market carry and basis improvement, it's about a 9-cent carry. That spread D's to March, by the way, narrowing. So there's about a 9-cent spread D's to March right now. So that would make March trade 390. Locally, dealing with end users, most of us are used to being able to sell a zero basis, maybe 10 over. So if we do get a chance to sell either a 0 to 10 over sort of basis versus the March, for a December, January sort of move, we would want to go ahead and sell that basis and then wait for this 380 to 390 March futures to trade and finally price the contract.